Have you ever wondered what goes on inside the mind of one of the world's most successful investors, Warren Buffett? Today we're diving deep into the investment strategies and portfolio changes of this billionaire, based on his latest Form 13F release. We'll delve into the details of his recent activities, including his purchases in Liberty Sirius XM, Chubb Limited, and Occidental Petroleum, as well as the rationale behind his major reductions in Apple and Paramount Global. The secret's out on Buffett's previously confidential purchase revealed to be Chubb Limited, and we'll explore why this was a key move for him. Next, we'll dive into the sectors dominating Buffett's portfolio, with a special emphasis on technology and financials. And because Warren Buffett is known for his preference for income-generating stocks, we'll also look at the importance of dividend stocks in his portfolio. So, buckle up for an insightful journey into the investment world of Warren Buffett. Stay tuned to uncover the secrets of Warren Buffett's investment strategies. Let's delve into the world of Warren Buffett's Berkshire Hathaway portfolio. It's a vast universe of 41 stocks, boasting a value of $331 billion. This portfolio is not static, it's dynamic, ever-shifting, and always keeping us on our toes. Recent activities have seen Berkshire Hathaway adding shares to Liberty Sirius XM, Chubb Limited, and Occidental Petroleum. These additions indicate an interest in sectors such as media, insurance, and energy, and suggest that Buffett sees potential in these companies for the long haul. But it's not just about adding. Buffett's strategy also involves reducing stakes when necessary. This includes trimming down on Chevron, Louisiana Pacific, Sirius XM, Apple, and Paramount Global. Each reduction is a calculated decision made with a keen eye on the market dynamics and the performance of these companies. A significant move in the portfolio was the complete sell-off of HPQ. This action underscores Buffett's readiness to completely divest from a company if it no longer aligns with his investment strategy. Notably, there were major reductions in Apple, which now makes up 6% of the portfolio, and an even more substantial cut in Paramount Global, down by a staggering 88.1%. The Paramount story is particularly interesting as Buffett acknowledged a mistake with this investment, leading to significant losses. Yet despite the reductions, Apple still holds a substantial part of the portfolio, standing at 4.81%. This reveals that Buffett's investment in the tech giant remains robust, driven by a blend of tax considerations and the desire to increase cash reserves. Lastly, a previously confidential purchase was revealed as Chubb Limited. This unveiling adds another piece to the puzzle of Buffett's investment strategy, emphasizing his belief in the insurance sector. These activities reveal the dynamic nature of Buffett's investment strategy. They offer a glimpse into the mind of one of the greatest investors of our time, showing us how he navigates the ever-changing landscape of the stock market. Stay tuned as we continue our journey into this fascinating world in the upcoming scenes. Now, let's focus on the significant reductions in the portfolio. The two major reductions that have caught the attention of many are in Apple and Paramount Global. These decisions were not made on a whim, but rather they were driven by strategic considerations. Starting with Apple, Berkshire Hathaway reduced its stake by 6%. The motivation behind this move was twofold. First, tax considerations played a significant role. This is a common strategy employed by many investors to manage their tax liabilities effectively. Second, there was a desire to increase cash reserves, providing more flexibility for future investments. Despite this reduction, Apple still remains a substantial part of the portfolio, holding a weight of 4.81%. Moving on to Paramount Global, the reduction was much more drastic, with Berkshire Hathaway slashing its stake by a whopping 88.1%. This decision was driven by the recognition of a mistake. As Warren Buffett himself acknowledged, the investment in Paramount didn't pan out as expected, resulting in significant losses. It's a stark reminder that even the most seasoned investors can misjudge a situation. These reductions, while substantial, are part of the ebb and flow of portfolio management. The goal is to maximize returns and minimize losses. Sometimes, this means acknowledging a mistake, learning from it, and moving on. As we see in the case of Paramount Global, it's not about being right all the time, but about making the right decisions most of the time. Even the best investors make mistakes, and they learn from them. Apple, a major player in Buffett's portfolio, also saw a significant reduction. Now let's unpack the reasons behind this shift. A key driver for this move was tax considerations. As savvy investors know, managing tax liabilities can be just as important as picking the right stocks. Buffett, with his keen eye for detail, is no exception. By selling off part of his Apple holdings, he's potentially mitigated a hefty tax bill, freeing up more capital for reinvestment. But tax wasn't the only factor at play. Buffett also had an eye on increasing his cash reserves. Given the unpredictable nature of the market, having a solid cash buffer can provide the flexibility to seize upon new opportunities as they arise or to weather any potential financial storms. By reducing his Apple stake, he's effectively bolstered his war chest, ready for the next big investment. Yet it's crucial to note that despite this sell-off, Apple remains a substantial part of Buffett's portfolio. A reduction of 6% may sound substantial, but it leaves Apple holding a significant 4.81% of the portfolio's total value. This indicates that the faith in Apple's potential for long-term growth remains strong. After all, Buffett's strategy has always been about long-term growth and value, so while he may occasionally rebalance his portfolio, it doesn't necessarily mean he's lost confidence in the stock. As an investor, it's essential to understand this nuanced approach to buying and selling. So, while the headlines might scream about Buffett's Apple sell-off, the reality is a lot more nuanced. Yes, he sold off a portion of his stake, but Apple still holds a significant place in his portfolio. And this is the crux of it all. Portfolio management is a delicate balancing act, and Buffett is a master of this game. This shows that selling does not always indicate a loss of faith in a stock. But it's not all about sales. Let's reveal Buffett's previously confidential purchase. Yes, you heard it right. The Oracle of Omaha, Warren Buffett, has made a secret acquisition. And now, the cat is out of the bag. The mystery purchase was none other than Chubb Limited. Chubb Limited, a titan in the insurance industry, was the object of Buffett's undisclosed acquisition. Now you might be wondering, why Chubb? Well, let's delve into that. Berkshire Hathaway has a long history with insurance companies, so this isn't a surprising move. Insurance companies have a unique business model. They take premiums up front and pay claims later. This creates a pool of money known as float that can be invested for significant gains. This has been a cornerstone of Berkshire's investment strategy, and Chubb Limited fits right into this approach. Moreover, Chubb Limited has been performing impressively in the market. It has a strong track record of profitability and a solid reputation in the insurance sector. This suggests that Buffett sees a lot of potential in this company. Also remember that Buffett is a proponent of value investing. He believes in buying shares in businesses that are undervalued by the market but have strong fundamentals. Chubb Limited in this regard seems to tick all the right boxes for Buffett, but the key takeaway here is that Buffett's investment strategy is still very much active, and he's always on the lookout for promising opportunities. Even though Berkshire Hathaway has trimmed its holdings in other companies, it's clear that they're not just sitting on their cash reserves. They're utilizing their resources to make strategic investments, and Chubb Limited is the latest example. This proves that Buffett is always on the hunt for promising opportunities. Now let's take a look at the sectors dominating Buffett's portfolio. In the chess game of investment, Warren Buffett's king and queen are undoubtedly the technology and financial sectors. Together, these sectors make up a whopping 65% of his portfolio, demonstrating Buffett's confidence in their enduring value and growth potential. Starting with technology, it represents an impressive 41% of Berkshire Hathaway's holdings. This sector has been a powerful engine of growth in the modern economy, driving innovation and productivity across all industries. Buffett's significant stake in this sector, with Apple as the crown jewel, underscores his belief in the long-term potential of technology companies. Despite reducing his shares in Apple recently, it still remains a substantial part of the portfolio, highlighting the importance Buffett places on the tech giant and the sector as a whole. The financial sector is another heavyweight in Buffett's portfolio, accounting for 24%. This sector is a cornerstone of the global economy, providing the necessary capital for businesses to grow and consumers to spend. Buffett's substantial investment in this sector with companies like Bank of New York Mellon and U.S. Bancorp speaks volumes about his faith in the resilience and growth potential of financial institutions. But why these two sectors? Well, it's all about balance. Technology provides the growth, the dynamism, the innovation. Financials, on the other hand, offer stability, dividends, and a hedge against the volatility of the tech sector. By investing heavily in these two sectors, Buffett is not just betting on companies, he's betting on trends. The digital revolution led by tech companies and the enduring importance of financial institutions in our economy. And let's not forget, this is Warren Buffett we're talking about. He's not one to put all his eggs in one basket. His diversified portfolio spreads across various sectors, reducing risk and maximizing potential returns. This sector focus reflects Buffett's belief in the future of technology and financials. Dividends play a key role in Buffett's investment strategy. In fact, it's a cornerstone of his philosophy. Now, let's take a closer look at how this plays out in his portfolio. 9 out of the top 10 holdings in Berkshire Hathaway's portfolio are dividend-paying stocks. This isn't a coincidence, but a clear reflection of Buffett's preference for income-generating investments. These dividends serve as a steady cash flow, a reliable stream that continues to pour in, regardless of market conditions. Now, you might wonder, why does Buffett place such a high emphasis on dividends? Well, the answer is simple. Dividends are a tangible return on investment. They are the profits that a company shares with its investors. And for Buffett, a company's willingness to pay dividends is a strong indicator of its financial health and stability. Moreover, dividends provide an opportunity for reinvestment. When these dividend payments are reinvested, they can buy more shares, which in turn can generate more dividends. It's a cycle that, over time, can lead to exponential growth. And it's this compounding effect that Buffett leverages to build wealth. But remember, it's not just about picking any dividend-paying stock. Buffett is selective. He looks for companies that have a history of consistently paying and, ideally, increasing their dividends over time. These are often established, profitable companies that have stood the test of time, much like the ones in Berkshire Hathaway's portfolio. In essence, this dividend-focused strategy is a testament to Buffett's long-term approach to investing. It's about steady income and consistent growth, rather than chasing the latest market fad. And it's a strategy that, over the years, has proven to be incredibly successful. This strategy provides a steady income stream even in volatile markets. So, what have we learned about Warren Buffett's investment strategies? We've delved into the intricate world of Berkshire Hathaway's portfolio and uncovered some of its recent activities. We've seen that while Liberty Sirius XM, Chubb Limited, and Occidental Petroleum have been on the receiving end of additional shares, stakes in Chevron, Louisiana Pacific, Sirius XM, Apple, and Paramount Global have been reduced. In fact, HPQ was completely sold off. We've also discussed significant reductions, particularly in Apple and Paramount Global. Buffett's acknowledgement of a mistake with Paramount, leading to substantial losses, was a moment of humility and a stark reminder that even the best can misstep. Despite the reduction in Apple shares, the tech giant remains a hefty part of the portfolio, standing at 4.81%. A previously confidential purchase was revealed to be Chubb Limited, a surprise that has undoubtedly piqued the interest of many. This secret purchase adds another layer to the understanding of Buffett's strategies. In terms of sector focus, we've seen that technology and financials dominate, making up about 41% and 24% of the portfolio respectively. This certainly gives us a hint about where Buffett sees potential growth and stability. And let's not forget about the importance of dividend stocks in Buffett's portfolio. Out of the top 10 holdings, 9 are income-generating stocks, underscoring Buffett's preference for a steady return on investment. In conclusion, understanding Warren Buffett's strategies can provide valuable insights for our own investment decisions. His long-term focus, preference for familiar companies, and value-seeking approach are lessons we can all take to heart. Every move he makes, every stock he buys or sells, is a masterclass in strategy and patience. And while we may not have billions to invest, we can certainly learn to think like Buffett, and who knows, maybe one day we might just strike gold ourselves. Understanding Warren Buffett's strategies can provide valuable insights for our own investment decisions. Before we wrap up, we want to hear from you. What are your thoughts on Warren Buffett's strategies? Do you have a favorite investment move he's made? Or perhaps you have a different approach to investing? We're all about fostering a community of informed investors here, so don't be shy. Share your thoughts in the comment section below. Your insights could help others in their financial journey. And if you found this video helpful, please give it a thumbs up. Your likes tell us what content you find valuable, and they help more people find these videos. Lastly, don't forget to hit the subscribe button and the notification bell. That way, you won't miss any of our upcoming videos. Remember, the more you know, the more you grow. So, let's continue to learn and grow together. Thank you for being a part of our community and for taking the time to watch this video. We look forward to hearing your thoughts and seeing you in the next one.